Hey everybody, welcome to the Green Room. We're going to talk about Coinbase and the tapioca boba shortage that's going on around the world, in case you're wondering what's going on. No, just kidding. Welcome to disruptTV, and we'll do some quick reverse introductions before we start. You're in the Green Room, and for those watching live, definitely follow us. Real quick, working our way backwards, Cecilia, where are you calling in from today? What are you going to be talking about?
Hey, I'm calling from San Jose in California. We're going to go talk about all things IoT and the food industry.
Very cool. Thank you so much. Snehal, where are you calling in from? Unless it's an undisclosed location, which is fine. And what are you talking about today?
Yeah, calling in from San Francisco. We're going to talk cybersecurity, AI, and automated hacking.
Automated hacking. Oh my God, very, very cool. And Michael, where are you calling in from today? And what are we going to talk about?
Miami Beach, Bitcoin.
Bitcoin. We never heard about that. Oh, we'll have to talk more. All right, so cool. Elle, do the honors, and we will start the show, and we'll start moving people off.
All right, 3, 2, 1.
Hello and welcome. Thank you for joining us on disruptTV. My name is Vala Afshar. I'm the Chief Digital Evangelist at Salesforce and your co-host for the next hour. We welcome you to follow us on Twitter at disruptTV Show. Send Ray, myself, our distinguished guest, your questions using hashtag disruptTV, and we'll do our best to answer them. It's my pleasure to introduce my co-host, Ray Wong. He's the CEO, founder of Constellation Research, best-selling author of Disrupting Digital Business and Breaking News. His new book comes out in a few months. Everybody Wants to Rule the World. He's a regular television business technology contributor. I often see him on Fox Business, Yahoo Finance, CNBC, and Cheddar. He's a global sought-after keynote speaker. And in my humble opinion, one of the top features to follow on Twitter at RWANG0. Welcome, Ray, to DisruptTV.
Thanks a lot. I'm with my wonderful co-host, Vala Afshar. As he mentioned, he's the Chief Digital Evangelist for Salesforce. He's also the author of The Pursuit of Social Business Excellence, and he's executives around the world pay attention to every one of his inspirational and insightful tweets. And when he's not hosting, keynoting, or leading events at Salesforce, you can find him speaking on business TV outlets such as Bloomberg, and also posting insightful analyses on ZDNet. But it's not about me. We've got a world legend here. Who do we have next on our show, and who's going to kick it off today?
I like that. I totally agree. Our first guest is Michael Saylor, Chairman and CEO of MicroStrategy, a publicly traded business intelligence firm he founded at age 24 in 1989. Michael was the creator and founder of Alarm.com, one of the first home automation security companies, and Angel.com, which he sold to Genesis for $110 million in 2013, one of the first cloud-based interactive voice response service providers. He's a named inventor on more than 40 patents. Credited as the inventor of rational analytics, he led MicroStrategy into fields of web analytics, distributed analytics, mobile analytics, cloud computing, mobile identity, and IoT. Michael is the author of the book, The Mobile Wave, How Mobile Intelligence Will Change Everything, which he published in 2012. At that time, the book anticipated the impact of mobile, cloud, social, in terms of politics and economic development, along with the rise of Apple, Amazon, Facebook, and Google. Michael founded and serves as a trustee of Saylor Academy, a nonprofit organization that has provided free education to 800,000 plus students. He's an advocate for Bitcoin standards, and we're going to talk a lot about Bitcoin in the next 20 minutes. He's a brilliant follow on Twitter, must follow on Twitter at Michael_Saylor, Saylor. And I say brilliant. I have witnessed Michael impacting new business development thesis of Elon Musk, which led to about a 1.5 billion purchase of Bitcoin, and it was all on Twitter, and we'll talk a little bit about that as well. Welcome, Michael, to DisruptTV.
Yeah, thanks for having me.
You know, Michael, hey, we're really excited to have you here. And, you know, we're going to talk about a range of subjects from, you know, what's happened in the pandemic to Bitcoin to what's going on. But let me start with this one, which is really about, you know, your role. I mean, you've been a technology investor in Apple, Amazon, Facebook, and Google. You've been doing other things in the past decade. You've been watching these trends. What are you seeing in the market that's different this time around? Because something is really different post-pandemic.
I think in the last 12 months, we saw an acceleration of digital transformation in two obvious areas. One is the digital transformation of sales, marketing, and services via zooming around and dematerialization of meetings. And we basically converted $50 million worth of sales and marketing effort into streaming video and Zoom meetings. And so So the velocity and the efficiency with which companies market, sell, service their products has dramatically increased. And the second digital transformation is the digital transformation of assets. And that's what Bitcoin's all about. It's like we know what happens when you transform photos or music or videos or books to digital form, and they move faster. But I don't think anybody was ready for the idea of transforming gold and silver and bonds and stocks and money to digital form, because that is just a profound thing that's impacting every company on earth, every person on earth, and it's going faster than any previous digital transformation we've seen.
I want to jump right on it because I saw this happen live. I pretty much live on Twitter. So on December 20th, you tweet, if you want to do your shareholders a $100 billion favor, convert Tesla balance sheet from US dollars to Bitcoin. This is a response to a meme that Elon shared. And so Elon responds instantaneously, are such large transactions even possible? And you respond, I've purchased 1.3 billion in Bitcoin in the past month. I'm happy to share my playbook with you from one rocket scientist to another. By the way, Michael has dual degree from MIT and he is a rocket scientist. And then just a month or so later, you tweet that on February 3rd and 4th, you're gonna have a Bitcoin corporate conference. And it's a meeting to teach executives the benefits of Bitcoin, and 1,400 firms show up to your conference.
An amazing show.
Lunch and learn session. And then amongst the attendees are a handful of executives from SpaceX and presumably Tesla. This is on February 3rd and 4th. 4 days later, Tesla buys 1.5 billion in Bitcoin. Can you just explain how, first of all, it's kind of cool when you impact the wealthiest person on earth at that time and convince them to, think about a new investment thesis to help the stakeholders and shareholders of Tesla?
Well, I mean, if you'd asked any company in February of 2020, do you have a Bitcoin strategy? They would be like, what's Bitcoin? Why do I need it? What's the problem with my traditional treasury strategy? But I think if you look at what happened following that, all the treasury strategies just were broken. If you're buying low yielding bonds, you're getting 0% interest. The money supply is expanding. It expanded 30% last I checked, but certainly 20%. So your purchasing power is falling by 20%. So that breaks people out of their traditional patterns. So the idea behind Bitcoin, and if you reason from first principles, and Elon Musk does reason from first principles, he created PayPal, and he created a rocket company nobody thought you could create, and he created a car nobody thought you could create. Well, then you look and you say, well, look, I got $20-30 billion and it's losing 15 to 20% of its purchasing power a year. What should I do about that? The answer is pretty clear. Buy an appreciating asset. MicroStrategy went through the process of considering everything, and we finally decided Bitcoin was the strongest treasury asset that we could find. My message to him, and it would be the same message to anybody, Facebook, Google, Apple, Amazon, is if you have $100 billion worth of cash or $10 billion worth of cash, it's yielding zero, losing 20% of its value a year. It's a liability. Flip it to an asset. The way you flip it to an asset is you convert it into something which is going up 200% a year. And Bitcoin's going up 200% a year for a decade, but it went up 800% last year. And if you understand Bitcoin, you think, well, it's $1 trillion asset, probably going to 100 trillion. So if I get in now and I convert my cash, which is depreciating, into something that's appreciating, you create a very positive cycle for your shareholders. And that's what I conveyed in the tweet. I mean, that's what he was doing. My only disagreement with him is I told him to buy 10 billion and then, 5 billion. If you look at what happened, if Tesla or Apple stepped up and bought 10 billion worth of Bitcoin, they would triple it, double or triple it.
Yeah.
You would, people noted Tesla made more money in 6 weeks following that decision than they made in the history of making cars.
Yeah, it was better than energy credits.
Yeah.
But the real idea is, if you're the first country to buy Bitcoin, if you're the first city, what if New York City borrows $1 billion at 3% interest and buys $1 billion worth of Bitcoin? It doubles. They've got $2 billion. Then they go back and borrow another billion. It doubles. They've got 4 billion. Then they eliminate taxes, right? Or the like. Then what does every other city do? They all have to follow. And what you're doing is you're creating a dynamic. Is the more aggressive you do this, the more aggressively other people have to follow you. Then your assets are trading up. Then you're generating investment income, and you're lifting with the balance sheet as opposed to the P&L. If you look at the K-shaped recovery, the K-shaped recovery is Wall Street companies. They see their balance sheets expand by 25 to 40% doing nothing. Main Street companies have to work 25% to 40% harder to get nothing. And if your business strategy is asset poor and manufacturing rich, you're fighting against the wind. And if your business strategy is I hold $1 billion of assets and the money supply expands, you're sailing with the wind. And so that's the general thesis there.
Michael, there's 40,000 publicly traded companies, but I believe there's only 32 that have Bitcoin on their balance sheet. So we're really at the beginning. I mean, and we had ARK Invest on our show, and they talked about if 1% of companies put the balance sheet on Bitcoin, it could be up as much as 40, 50,000 price increase
in February of 2020, Bitcoin was a consumer thing. It was for crypto traders and consumers, and there were some hodler believers, but at that point, the cost of capital felt like more like 7%, and conventional treasury strategies you thought would yield 3%. And you might hold your nose and accept a minus 4% a year thing because, it'll be 20 years before it's really material. That's fine. But when the cost of capital went to 21%, the treasury yield went to 0%, and you got minus 21%, then every institutional investor says, well, maybe I need something like gold, but is this better than gold? And that's kind of what they, Paul Tudor Jones, Stanley Druckenmiller, Bill Miller. You have 1,000 companies, 1,000 big investors that all discovered digital gold. Companies like mine, when we did our search, we found that there was no public company with any material amount of Bitcoin. Wow. We were the first, but then we were followed by Square, we were followed by Marathon Digital, we were followed by Tesla, and so on and so forth. And so it's still early days. I would say that year 0 was from March to February 8th when Tesla announced. We're now year 1 of legitimate institutional adoption, and we should see the next 36 months should be kind of very fast.
Amazing.
Growth.
Yeah, no, we definitely see massive adoption. But the interesting question is, what do central banks do? Are they going to buy Bitcoin? Are they going to hold those in reserves like they heard other reserve currencies? Or is this going to be kind of a war on the dollar? Because it's starting to look like a war on central bank currencies, and will central banks participate? So what do you think?
I think that the right way to think about this is that money has 2 components. There's a currency component, which is a medium of exchange and a payment network. And then there's an asset component, which is a long-term store of value. And it used to people used the dollar as a medium of exchange, and they used debt and ETFs and index funds as store of value. Mm-hmm. And maybe some people use gold. I think that if you look out, you're going to see the final culmination of the mobile wave is 8 billion people on the planet with a mobile wallet, and one layer is US dollar or euros in your checking account or your payment network, and it moves at the speed of light on compliant payment rails. And then the second layer is your savings account, and that's like a high quality asset. So what are the high quality currencies? US dollar, euro, yen, yuan. What are the high quality assets? Bitcoin, and then fill in your blank, an ETF, your Amazon, Apple. Who are the losers? Low quality assets, probably gold is a loser. Some of the, crappy stocks are a loser. Bonds that are negative yielding, savings accounts that give you negative interest. Those are losing assets. And the losing currencies, Venezuelan currency, Nigerian currency, Argentine currency, Lebanese currency. The weak currency is getting squeezed out. Weak assets getting squeezed out. The world will stampede toward strong assets, strong currency. I think the US dollar is a winner. I don't think it's a loser. I think that this spreads American supremacy to you should expect 5 billion mobile wallets with the US dollar on it. And now how do you get the mobile wallets to synchronize in cyberspace? You need the Bitcoin blockchain, because That's the settlement network that lets a mobile app in Africa settle with a mobile app in the US and a mobile app in China once a day on the blockchain. And then you got 18 million applications or 18 million transactions an hour running on the second layer with the currency.
Yeah, and you're talking about settlement and trade in a massive way. I mean, this is, are you worried about hacking? Are you worried about people breaking in? Because this is one of the big concerns people still have in terms of being copied, hacked, or banned. I mean, some people I know have had their Coinbase accounts hacked and take Bitcoin stripped from them, right, along the way. So, well, I mean, there's no central bank protecting you here.
Bitcoin's the most secure database, secure network in the world, and in the first 1, 2, 3, 4 years, you couldn't be sure, but after 12 years, it has not been hacked. The risk, the cybersecurity risk, is at the layer 2 level with Bitcoin banks.
Yep.
Square is a Bitcoin bank. Coinbase is a Bitcoin bank. Mt. Gox was a Bitcoin bank. So there'll be 100,000 of these mobile apps and websites sitting on top of the underlying Bitcoin. They all have their own attack surfaces, and they range from simple password on a web browser down to like triple factor authentication hardware wallets. And you'll see all of those things. I think if you're a user of Bitcoin, you have to just very carefully decide what kind of Bitcoin bank do you want to deal with. And look, you could buy Grayscale Trust, GBTC, and you own some Bitcoin exposure, and you don't really have the hacking concern. Right. Or you can go the opposite extreme, and you can memorize a 24-phrase seed key in your head, and you might forget phrase 23.
I've lost a few.
And then you lose it. So
I lost a few, Michael. I have a few on some old Macs. I'm trying to figure out how to crack. I've lost a few Bitcoins. Like they were like $100 when I bought them. I'm like going nuts.
I tend to think sometimes, you're a bigger risk to yourself than the bank is.
Definitely.
Yes,
I think you might find that people will fall in love with the idea that like Apple gives you multi-signature with the iPhone, the Apple Watch, the biometric secure element in the cloud, and they might get comfortable with something like that, It remains to be seen who's going to win the war. What you've got is Fidelity competing with Coinbase, competing with Square, competing with Trezor, competing with Ledger, competing with memorize the stuff in your head.
And Binance,
and that's the market, and that's all fair, and it's fine, and the market will decide. And by the way, it's not even that there's one right answer, because if you're Mass Mutual and you want to buy $1 billion of Bitcoin, you're not putting it on a Trezor or whatever.
No.
You don't have the ability. So there are flavors of money, and everybody's going to take a different approach to put their money into this asset space.
Makes sense. Last week, I saw Jim Cramer tweet, "Pay me in Bitcoin." Almost daily, I see professional athletes, NFL, NBA, pay me in Bitcoin. You just announced, I think a week ago, that your board of directors are going to get paid in Bitcoin. Do you think companies are going to adopt whether it's 401 contribution or a mix of restricted stock options and getting paid in Bitcoin? Will companies, in order to attract talent, offer payments and compensation with cryptocurrencies? And how was that conversation with your board when you told them? They must have been all clapping and high-fiving when you said that.
Well, the whole idea is Bitcoin is a savings account. It's a bank in cyberspace offering, a simple, secure savings account. And that savings account has been yielding 200% tax-free interest for a decade, and this year it's doing more. So it's a good way to save money. The board was excited about it. If I have 200,000 in cash and I convert it to Bitcoin, if it goes up 20, 30, 40% a year, I mean, if it went up 1/10 of what it's been going up, it's still a million times better than my alternative of sitting in a bank savings account. Our employees are very enthusiastic about this. The next step for us is to roll out Bitcoin on-ramps and Bitcoin savings options for all of our employees. I think you're going to see an explosion of that. Everyone offering 401k savings plans and employee savings account. It's like the employee stock program for the decade. If I wanted to diversify, I can put my money into the company stock, but I'm maybe I would like to put my money into a thermodynamically sound money that's going to be appreciating. It's just a good retirement idea. And so it's a big opportunity, right? I think you're going to see an explosion in those finance products from insurance companies and fund companies and the like over the next 12 months.
I agree.
Well, hey, I'm going to take us out a little bit out from the Bitcoin conversation, talk a little bit about what you've been doing at MicroStrategy. There's been a lot of transformation going on there. Let's spend a little bit of time talking about what's happened with your clients, what people are doing, hypercards, intelligence, enterprises, and other areas. Let's jump in there for a second.
Okay. Well, there's an acceleration toward complete digital relationships. So we're doing, our tech support online instantly using Zoom. We have digitized all of our services and all of our education, and we've uploaded to our website so people can get the answer in a higher velocity. We have accelerated our development of cloud-based products. So Hyper now is an example of hyper intelligence delivered in the cloud, so that someone in Singapore on Saturday afternoon could show up to our website and launch their own pilot and build a hypercard application, plug it into their website, and deploy it by Sunday without talking to a human being. Intel now is our next really cool cloud offering, where we'll make it possible for someone to build a fully featured business intelligence application in an afternoon without talking to a human being. I think the general theme here, Ray, is just take the friction out of the value proposition. Like, nobody wants to meet with you. They don't want to schedule something 2 weeks in advance. They almost don't even want to call you on the phone. It's like, I want to plug this into the Google BigQuery, and so I didn't know how. So I want to see a video for 7 minutes, and then I want to click on it, and I want it to work, and then I want to deploy it. And then 30 days after I deploy it, then a salesperson may call me and we'll negotiate what discount I get off of, we say it's $10 a month a user. And the idea is the company shows up, they know they can deploy it, they build it, and then like 2 months later, they're beating us up to get like 30% off of the $10 a month a user. But that's like the only engagement they really want when I ask for the discount or the 3-year license or the something. Otherwise, they already know it works and they've already deployed it, right? That's super fast, and that's the value proposition people want in the virtual era.
Autonomous intelligence. Yeah, absolutely. I mean, Ray and I, we speak to executives on a fairly regular basis, and speed to value. That's how they're measuring quality of partnerships and who they want to go to battle with. So this is amazing. That's fantastic, what you're doing. And it's every line of business is looking for low friction, speed to value, at the speed of need. And unfortunately, they don't get to decide. It's their customers that decide, at what speed they're going to choose you as a business partner. So it's great innovation.
Hey, Michael, really appreciate it. Really appreciate you sharing your insights here. You might have love for next best action, MBA. So you're making that possible. And of course, you're leading the way in terms of thinking in terms of reserve assets, Bitcoin, the future of money, the future of mobile. A lot of what you wrote in your book in the mobile wave in 2012 is now coming true. It's taken 10 years. Think about that. 10 years to get a lot of what you're talking about now into mass adoption. We're here with Michael Saylor, chairman at MicroStrategy, rocket scientist, Bitcoin evangelist, blockchain, cryptocurrency expert, and more importantly, our friend. So thanks for being here. You can follow him on Twitter at Michael_Saylor, and I really appreciate you being on the show.
Thanks, guys. It's a pleasure.
Thank you, Michael. Keep pushing on Twitter. Keep pushing on social. We need disruptors to, help us challenge our assumptions. Our next disruptor